Welcome back to another episode of the Financial Beast Podcast. I am your BFFF, best financial friend forever, Eric Miller. And I had a treat for you today. Had a conversation with a friend of mine who is also a very successful physical therapy practice owner in New York. His name is Vinod Somareddy. He has well over 10 locations, has over 200 employees. And we wanted to have just a raw conversation on someone that is contemplating selling their business, some of the things that they think about, some of the things that he did to help build his business to where it is, and just his thought process on like what a transition would look like, what he's going to do afterwards. And it was very open, and I think a lot of people will enjoy it. I think you'll get a lot of good data out of it if you're faced with this decision right now for yourself. And I really do hope that you enjoy the conversation that we just had. As always, please like, share, subscribe to the podcast, write us a review so we know how we're doing. And if you are in need of any financial help, if you're a practice owner that is in need of financial help, please do not hesitate to contact us. Go to Econologics.com and schedule an intro call with one of our advisors. I will see you on the next podcast. Be well. So it's going to be a different podcast than what we normally do. Usually I have a guest, or I have Eric Gershon, who's like your best friend. And
my best friend.
We're going to talk about something that we're actually going to have a conversation with an owner about selling their business. Thinking about selling their business.
Yeah.
So why don't we get into this and decide whether or not it'd be a good idea or a bad idea and all the pros and cons. How long have you been thinking about selling your business right now?
I think you think about selling your business from probably the first bit of time you get some success in it. Or more importantly, I think when somebody else has done it, I don't think we get into business thinking we can sell it, particularly physical therapists. I know I didn't, but then when you hear somebody selling their business, you're thinking, oh, I didn't know that's a good amount of money to sell your business. I didn't know that's possible.
Mm-hmm.
And then you kind of start thinking about it a little bit, and you do your legwork and research around it, and you start thinking about whenever that time is. At least for me, it was that way.
Okay. But you've owned the practice for how long now? 20 years?
20 years.
All right. I mean, did you have like a midlife crisis or something like that? Where all of a sudden you're like, I want to spend more time with my kids, or I just want to go do something else right now?
I think it's natural for people to go through iterations of their business where things change, right? There are certain points where insurance companies change the way they do things. There's certain points where you expand a business and it doesn't go the way you want it to go.
Mm-hmm.
I think for me, those two things happen, but then also, having a situation where right now, physical therapists are leaving the market, or at least they're a little harder to hire. So the challenge becomes is if I can't hire a therapist easily, I'm paying them a lot more. What's the future look like? I think anybody who has a successful business probably would like to keep the business till they feel it's optimized for themselves. So a guy might get a business up to $1 million, and that's for him, depending on his circumstances, is optimized. Another guy might think it's 150 locations. So where in that timeline do you think that you've achieved your goals, and then what are you willing to experience through going for the goals that makes you want to pursue it without kind of throwing the towel in and saying, you know what, this is not going to happen, or this is going to happen over 30 years, it's going to be real slow, or I can't gain any steam, and limit that.
But you have a business right now that is set up where, you don't even live in New York anymore.
Right.
You live in Florida.
Yep.
You got a pretty good leadership team that runs it.
Yeah. Yeah, I think that's that.
Why even like, I mean, that'd be like most owners' dream situation right there. But yeah, you still have problems with ownership because I have to listen to them all the time.
Right.
But
not all the times, sometimes.
So, because I think this is like everyone's ideal. Oh, I can go sit on a beach in Florida, have my business run. I don't have to be there and treat. Why is that not all it cracks up to be? Or is it?
Because a business is going to grow, and a business is going to have challenges that come with, doing things. And if you're not growing your business and you're not expanding your business, then, ultimately it's going to give you problems.
Mm-hmm.
I mean, I could give you a variety of reasons and situations that have come up. If you think your management team is going to happily work their asses off for you and do everything without your help, you're mistaken. It doesn't work that way. The amount of time you got to put in to redirect people, get them focused, and then you might have a guy, you might have two guys, but how do those guys manage the other guys beneath them? Do they give enough of a hoot to really drive the business? Do they have enough of an accountability, and a purpose to drive the business beyond all of the things that make a title good, like the pay and the benefits and the time off and the working from home? Or they really want to drive the business? And it too from your side. I mean, you have some guys that really drive the business, but it's not.
Still have to oversee them to a degree.
Yeah. You're going to have to oversee them to a large degree, I think, the bigger you get. Mm-hmm. If you're going to put some substantiation to your business, if you want to grow it, you see an opportunity to grow it, that isn't as easy as it sounds. I think being away requires you to have a perpetual attention on the business at all times, because innately, the further the distance, the more challenging the communication becomes. So you have to have an ability to run the business and or make the business really not depend on you to really make it successful. Like, you just got to have loads of new patients coming in and loads of therapists who want to work for you coming in for that to be not a problem. I could assure you, if you have a therapist and you could hire at will, and you could get as many new patients at will, it doesn't as much matter if your operations are as tight. We don't have that. And we're running a business the right way, right? Mm-hmm. We're not leveraging 1,000, 2,000, or millions of dollars of debt to make something happen. We're doing something that is, I think, by your standards, as in finance, for a business, the operational correct way of running a business, right? You pay your bills on time. Yep. You don't accrue too much debt. You try to save. You try to take profits. You try to take, salaries on time and find ways of saving money and tax planning, et cetera, et cetera. But if you're under circumstances where you can't do those things, the banks are very easily they send emails all the time, right? So you start borrowing some money, and before you know it, you're doing things for the wrong reasons. And that's why you see companies, larger companies in physical therapy, having challenges with their debt.
Yeah, that's one good thing that you didn't ever have to do, is accumulate hardly any, if you got no debt in your business, which is rare. Would you have, looking back at where you are right now, would you have been a little bit more certain about, this is what I want to build it to before I exit out? Or did you do that? Did you come up with a number? Like, if I get to this amount right here, I'm going to check out.
It's a great question, because when I always saw this business, and this is my belief in physical therapy, and this is why I got into physical therapy. It still stands to this day. I do believe physical therapy is unto itself a great business, meaning that what we do from a level of a professional basis, how we integrate into the healthcare system, how much we provide value, and what we do as a whole is very valuable. And I think the challenges that were in the business at that time were challenges that I saw that I could conquer. Either it be providing better quality care, running a better business, etc. So when I first hit my first target, which is just about 1,000 treatments a week, I was like, you know what, that's a great mark to get to. It's more of a personal accomplishment, business accomplishment. I've done something substantial. When I started to accomplish more around 2,000 visits a week and started seeing better, revenue numbers, and started hearing from other peers that they were getting good pay, good deals, payouts, I started diving into it more. So my mind shifted a little bit away from like the goals of the business in terms of the volume and what it meant to me to grow it to, hey, what if I took X amount of dollars off the table today, or I sold the business, and I started to think about what do I do next with that? Is that something that is it something that I want to really look at in terms of what's a better second option or third option for me? And in doing so, I think I found that there were some, I don't want to call loopholes, but challenges in terms of, really figuring out what, what the other guys are doing when they're buying businesses. For example, if you're buying a business, you're buying my business. Why are you buying my business? And a lot of times that's because they think that my business is very obviously it's valuable enough for them to buy it, right?
Mm-hmm.
But then you get into a mindset of like, why don't I do something like that?
Start buying businesses. You mean?
Yeah. Why don't I start acquiring physical therapy practices? And that's what I did. I started shifting my mind to let me acquire some of these practices. I know how to do it. I see the value in others doing it. Let me start to scale it. And try to scale it and build it up. So that's kind of like a shift in an idea. You went from hitting your goals as a personal target, then you evaluate, the company as a whole and what's out in the field. Then you decide, okay, at this point, what do I do? Is it more about goals? Is it more about achieving certain things or not? Let me shift inside here
Mm-hmm.
to a different location real fast.
You on the top floor?
No, it's just the storm is pretty relevant. It's coming. It's going to come, and
I see.
Be a problem. Definitely going to be a problem. Come inside. Yeah. All right. That's better.
All right. So when you got to your first target of 1,000, that's where you're like, all right, well, I've proven to myself that I hit that target.
Mm-hmm.
Now it's like, what are some of the guys that are above me doing? And that got you into more acquisitions. Because then you set another target after that.
Yeah. So the first target was 1,000. And then once I started looking at more acquisition-based kind of game planning, if you want to call it, I was at 2,000. And then from there, the target was 3,000. And a lot of that was based on, I think this is a common play for a lot of guys. It's based on what your peers are doing, right? So you hear, sometimes I think that anybody's ideas are never their ideas, right? It's probably the truth. I mean, you start to see.
That burns you up too.
Well, you see somebody else who's like, yeah, I got 50 locations or 10 locations, and you look at them and you look at what they're doing, and you set a benchmark of what you want to get to based on what they're doing. And so I think that's kind of a little bit of a nebulous target.
Mm-hmm.
But I always felt like 5,000 treatments a week was a very substantial number as a company based on some private equity data that I've received, where if you're at 5,000 visits a week, you could basically fund your own expansion. So if you're you're looking at let's say, I know you're jumping on the calculator there.
Well, I'm trying to think. That's probably what, 25 million a year, somewhere around there.
Yeah, that's right.
Okay.
That's right. So I think anything above 20 allows you some good bandwidth to do some stuff like that. But I really think from my calculations, and I can get more into it, 25 is a number that will give you an opportunity. And this is not something that I've kind of necessarily put together. This is what I've heard. Like, if you really look at, that number, it's going to be for sure an ability that you can have to buy your own practices, offset some of the challenges in the field, labor through some labor challenges, and work through the market, right? Because you have enough substantiation, you have enough of a market share in that position to do those kind of things.
Yeah, but did you ever? Okay, but do you have a number in mind of do you have to get to 5,000 and then you're like, all right, I'm going to exit out at that point?
I think honestly, it's based on. For me at least, it's based on the opportunities that present themselves. But I think anywhere from now going forward, I could exit, depending on how much of the stress I want to deal with, how much opportunity I see out there to grow. And reality is that if there is a market in New York, particularly, there is a pretty heavy market for private equity and partners that are substantial, and they're going to provide potentially something that I can't provide my staff.
Yep.
And at some point, not because I'm going to lose the staff, but at some point I could take what I've accomplished with my team, work into a partner and provide more things to my team with the partner that I couldn't alone. So I'm just going to, in my opinion, advance that up. But the key thing, and I would recommend this to anybody, is that you have to go into those deals knowing exactly what you're going to provide the partner, and make sure you can provide something substantial to that partner that they either are doing themselves, not as well as you are, or they are not doing. And that partner should provide you something that's specific to what you need. Either it be, better healthcare insurance for your team, a better management team, a better plan. And a lot of times, a lot of these guys will sell and work with people that are just far more experienced and have more background, can provide them guidance to growth. Or that partner could take your team when you're not there and accelerate that team to another level that you can't do. So, yep.
So how much do you care about in looking at this decision to sell? What factors are you looking at? Obviously, you want to get a good. You want to get a good valuation for the business of money where you don't really have to worry about money again. I know that's probably a component part. What do you really care about? Legacy? Do you really care about what happens to the practice afterwards? Yeah. No.
Yeah. I mean, I think anybody's going to care what happens to the practice afterward, but I'd also think they're foolish to believe that practice is going to remain somewhat the same to what they left it as. So if I have 10 clinics and now this platform moves it forward and you're integrated with 150 or 300 clinics, I mean, you're going to be a different business. Mm-hmm. So if I would recommend people not get fixated on the idea. What I would suggest is we're a people business. If you're gonna exit out, just make sure you provide an opportunity for the people that are there to see a future, to see an opportunity. And even if they don't see a future and an opportunity, somebody will. Somebody from the partner side will, or somebody within your company will. So I'm not too worried about that. I think the legacy that when your company gets big, you have 200 employees, and you're fixated on legacy or something like that. I think it's more relevant in smaller markets. If you got 20 clinics and you're in a small state, understood. But when you're in a bigger area, I think what's more valuable is what the services or what you're providing to the community with the partner or with the equity group. And people have to understand the difference between the two of those, because it has implications
between a partner and an equity group.
Yeah, a partner meaning like a group that's funded, has multiple locations, has a service model that has money with it, right? That is already pretty established and wants to bring you in and bolt you onto an existing platforms to provide that entity a broader base of opportunity for everybody involved, and do it nationally. Private equity is going to be more, hey, we want to buy you, we want to grow with you, and you're the platform. We're going to invest money in you, but we're going to make sure that you leave a lot of the money in our in your company or in our company as subsidiary, so that way you have a lot more risk. So that's kind of how I see it. I think the nomenclature, the terminology might be a little offset by the fact that this is more of a strategy point. So in going to sell, do you want to sell to a private equity firm that's going to pay you 70% of your EBITDA, leave 30% of your shares in with their company, go for the gold, fall on your face if you don't hit it? Or do you want to go for a company that, may give you shares in their large base? You sell all your shares to them. They give you like a couple of shares from their base, or they don't, and they have a situation set up for you to grow, and you're a partner with that big outfit already existing.
Mm-hmm. What scares you most about making a decision to sell? Or, yeah, maybe not scares you, but you'd have the most attention on.
Well, just on the concept of scared, I'm not scared. I'm zero scared about selling. And I would say the only thing I'm scared about in selling is the finances.
Testosterone's like at 1,200 right now, isn't it?
No, it's not. I wish. I would be scared about the financial ramifications of not having something that provides my family and what I'm doing, what I've been consistently doing, and it would have to depend on the payout and the setup and all that stuff. But I wouldn't do a deal if I was concerned about that. Unless, of course, things weren't going good, right? You're not hiring therapists, insurance is cutting you, the market share is getting tougher, etc. But what concerns me, or what would concern me, is just, am I making a move too late? Am I missing the boat on an opportunity to be part of something that could help grow the company and take stress off of my plate and grow? And stress is a thing. I'm almost 50 years old, so do I want to endure that for another 5 to 10 years? Do I want to shift gears? Do I want to do something else I want to do? So I think those are more just.
Is there something else you want to do?
Lift weights 24/7. I think I've heard this long enough where people kind of
podcasts.
It's easy enough.
It is easy.
We could talk about it this all day long, right? I've heard this enough where people are like, you got to have something else to do when you exit your business. And I always kind of think in my mind, well, I know my business really well to the degree that I know a practice my size. And that's valuable to know what you know. Do I want to learn something brand new? And do I want to become an expert at that? That's taken me 20 years to become an expert at what I'm doing today. Maybe not 20 years, maybe less. I don't know the answer to that. I do know that I do like to integrate and work with different people. I do know people, my main strategy has always been very simple. If I'm going to work and do something like that, I want to be able to move forward and work with people that challenge me more, mental acuity in doing things, provide me an opportunity to be part of something that could be more challenging to me that I have to really think about. And then also there's the other factor of it where we're in a very different market, right? I mean, like we talk about this all the time. You see guys who don't have college degrees, who don't have really much going for themselves until yesterday, and now they're making millions of dollars selling some shit on Amazon, or they're writing books about things that are about health, and they're like, they sell cars, and you're like, what the hell is going on here, right? And you start looking at that, and that's all fluffy stuff and all that, right? You got to have a position to do that. You got to be whatever financial position to do that. But the conversation goes to how do we take a sale proceed, put it into something that kind of moves the needle forward for your family, for the people that you want to work with, and how does that make you feel? Do you wake up in the morning and say, hey, you know what, I sold my business and I've done this. This is my goal. This is what I wanted to do. I feel great. And I'm going to feel great like this for a year, 2 years, just getting up and sitting around and chatting it up with podcasts and all, and maybe contributing and doing some things that could help people and slow roll that out? Or do I need to wake up tomorrow and be like, I'm bored. I don't know what to do with myself. I got to do. It's hard to tell. In my opinion, it's hard to tell. Somebody's going to tell you, oh, yeah, no, I got to do something else. Good. No problem. But, you have enough, owners that have sold as part of, your client base. You could tell me how many of these owners, my question to you is how many of these owners are thrilled about what they're doing next after selling? And that's one question. I think I know the answer to that. And the second question is, out of those owners, say whatever they're going to say about their experience after they sell, how many of them, in your opinion, are doing something that's making more money than they made from their business they had?
Well, that one's easy. Nobody's making more money than what they did when they exited their practice, especially if their practice was in a top tier level, where they're making, let's say over $600,000 of personal income from the practice. I mean, you're not going to replace that right away. I mean, it took them 15 years to get to that level to do. It's not going to happen overnight.
Yeah. So the guy's 50 years old. He sells. He's making $600,000. He makes a few $1 million, whatever he makes on his transaction. Now he's 51 years old. He's settled. His honeymoon period is over from not working from his practice. He's transitioning a little bit, whatever, give him a year. He's 51 years old. Does he want to work 15 years more to build something up? That's on him. Some guys would do it. Some guys I've seen, guys in New York, 82 years old, 83 years old, they're still coming to the office. This guy in my office building shows up every day. Guy's got to be 85. He was gray as shit when I first met him. That was 20 years ago.
Yeah. I mean, it does depend. I mean, it's rare. Number one, people selling in their 50s is pretty rare. I mean, there are some people that have done it. And for the most part, they're still involved in their current with the sale, still involved, having to either be part of the leadership group or whatever. Very few of them have been able to find something that was meaningful afterwards. Some of them have. Some of them, gotten in other businesses and, started doing other things. And so I don't know. I don't know. There's a one size fits all on this one. But you will find something to occupy your time, good or bad. Yeah, that's for sure.
Yeah, for sure. Yeah, I'm not concerned about that because
I don't think you have to have the next game lined up automatically, because I've seen some people that haven't, and then, but they were searching for something and then they found something and they're like, okay, this is what I'm going to do. So I think it's the intent of, I want to find something that will replace the, because when you own it, you're going 150 mile an hour. And then the moment that you sell it, I mean, you're going 20 mile an hour.
Yeah.
So there's got to be something that at least gets your gears up to all right, it doesn't have to be money motivated either. Most of the time it is, but I think it's something that at least gets you jazzed up to pursue.
I do think that people will be a little less money motivated as time goes on. When I say good, the benefit of mankind, I think there's probably a little more of going to be a bit more of a purpose to do that. Because reaching people is easier than it's ever been, right? I mean, you could reach people on social media, you could reach people through different platforms now. So if you feel like you have something that you want to share that's valuable, that you love, and you're financially secure, and you want to drop 100, 200, 1,000 or whatever, even $1 million in some activity that you know that's not going to produce you a lot of money, but makes you feel good at night, and you feel like you can make a couple of videos and prance around in the grass with your shoes off and no socks. I mean, good for you in the morning. It's not a problem. But if you feel like you want to, if you feel like you need to, that goes back to your question. If you still feel that you sell your business after 20 years and you still feel like you need to do something to financially get by, that's going to be a little bit of a challenge, I think, in selling your business, because either your business was not valuable enough to be sold at the time, or B, you made a knee-jerk reaction to sell a business that shouldn't have been sold at the time, or 3, you just were like, fucking, I'm out. I can't deal with this shit anymore, and that happens. So
that does happen. Yeah, we were dealing with that with somebody here recently that could have sold their practice for probably $1 million more than what they're probably going to end up selling it for, but just getting out was more important to them. And that's a bad situation right there. You do have to make sure that the sale proceeds, they may not match what you make from the practice, but it should easily pay for your ideal lifestyle, whatever amount that is. The sale proceeds should allow you to have your ideal financial lifestyle, whatever that amount is, where you don't really have concerns about money at all. If it doesn't do that, then it's like, it's probably too soon.
Yeah. And the other part of it too is that as much as it sucks dealing with the business, after 20 years, 10 years, 15 years, you probably know enough to make some moves that you can change the direction of the problem, right? I mean, there's enough about the business, so you're more control over it. You have an ability that you've worked with over time. So it goes down to like, what kind of pressure are you experiencing? I mean, are you just feeling like it's so much pressure? And that's kind of where I think it's been tough for me, is because I know a lot. Like I can't really be, I can't be taken off my my post, I guess, because somebody knows more than me about it. I pretty much know in my industry, I pretty much have a pretty good handle in my area too of what's going on. You can't control everything, like insurance payments and people using debt to pay for programs and stuff to outcompete with you in terms of hiring. But overall, running a pretty good clinic, we could make some quick changes today. If, I'll give you an example. Like, we have one of our therapists today. He had a bunch of cancellations yesterday. And we were like, man, what's going on with this guy? Like, so we started to evaluate the 3 months worth of cancels. We looked at the insurance payments. We looked at payers. We looked at, the patient's visits. We looked at his 2 other therapists. He's a director. Looked at 2 other therapists to see how they were doing. And, we're in the process of evaluating that data. But, when you start to look at the whole thing, you start to kind of look at it and say, well, is it the insurance payment? Is it the referral sources? Are we getting bad referrals from physicians that are these 3 physicians? We don't know this data. And once we get all that data pretty quickly, we could make a move. We could decide what to do. That's a lot of time in a new business. That's a lot of time in a place where you're not sure that you're going to waste time, and if you can do those things and make a change in the statistics, and you can make a change in what's happening there, it's a powerful thing. A lot of guys either don't know those things or don't look at things, a variety of reasons, any business. And if you could pull those strings and see what happens, you could make some pretty big decisions that if I own an Amazon business or I own your business, like, what would I know about that? How would I know what to do there? I wouldn't know anything. So I think anyway, it's going to be just following. It's just the same thing you said. It's like being successful in the next business. It's not likely to be as successful in your current business. I'm sure there are many, many people have done that. You hear stories all the time, so it's,
I mean, you hear stories all the time, but how many people actually have been, but you don't hear stories about the people that, failed and didn't do anything. You hear a lot more stories about people that sold their business and then ended up freaking alcoholics 2 years later, 3 years later.
That's true.
Divorced, in bad shape, broke. There's probably more stories of that than of the successes.
That opens it up to one other comment. Is like people have personal life situations, kids, divorces, they're doing weird stuff that we never hear about. They make those decisions. They have to make those decisions, or they want to make a decision based on that. It's tricky. You've had it. You've told me some stories where guys just kind of surprisingly, take a deal with somebody. They advise them against taking this deal, and they just did it. They tell you like 2 weeks after the fact. You're like, dude, what the heck? Why would you do that? You could have gotten them, a couple $100,000, $1 million more here, and they did it because whatever. Who knows? Getting divorced or they need the money tomorrow.
Worst method of making a decision is doing it in confusion, because it will 100% of the time be destructive. So so when you're thinking about a sale, when you're thinking about exiting, it just can't be something that's like overnight. It's got to actually be pretty well thought through. What's the benefit of not only myself, but for patients and the employees and everything else as well, which I think you're kind of doing right now.
Yeah. I mean, we're in a business where your reimbursement stays the same or goes down. So you're not going to get paid more because you have more experience. You're a better therapist. That sucks. That is ultimately in the physical therapy space. That is ultimately a very difficult thing. People say, let's go cash based. Okay. If you want to go cash based, you're going to basically take out a significant percentage of the population of physical therapists, because being cash based means you need to have some business acumen to be cash based. And it takes a long time to develop clinical skills that people want to pay you sufficient amount of money for your salary, in doing what you do. The other part of it, I tell my guys all the time is that, aside from the reimbursement play, you have, you have to look at volume in this business. It's not a business that's a non-volume driven thing based on the first thing I said. So you have to be able to perform that volume and keep that up there. And then the last thing is just going to be identifying how you manage things, how you do your administration. You have a person who's not performing. Do you let them go? Do you let them take vacation whenever he wants during the week of 4th of July when everybody else is taking their vacation, and tank your complete statistics of your patients? These are things that you have to really confront and look at. And the more you're able to look at those finer things in the scope of the business you're in, the better decisions you have to make. Nobody wants to tell a therapist see more patients because, they could, and they could pay them a percentage or give them some offset their salary by some sort of equity share and all that, which I think isn't a bad strategy. But how many therapists really know how to move the needle? I'm talking about 100 guys. How many of those 100 guys are going to really move the needle and make a big difference in what they're doing? And then where's the money? If your insurance company is going to pay you a fixed rate, it's not like tomorrow they're going to pay you more. You can negotiate with them, but there's no guarantee. Unless you have 500 clinics, you're a big outfit, and you want to negotiate with an insurance company, they could, they could turn around and say, we'll negotiate with the hospital, but not you guys, no matter how big you are. That's what the upper management decides to do. So at the end of the day, if you don't really understand the business you're in and work within those parameters, then really educate your staff around that. The staff has to know that, sometimes we have therapists who don't do their notes on time. They see a patient today, they don't do their notes till Friday. So Friday comes and goes, they do their notes Saturday morning, they're happy, they get a good week, it's all good in the hood. We don't bill till Monday morning. It gets the insurance company the next day, and then it takes 3 to 4 weeks just to process the claim. If the claim is a Medicare claim, for example, or Medicare pays 80%, then the 20%, which is paid by the secondary insurance, not Medicare, they have to get it after the 3 weeks. So now you're waiting for them to process their shit for another 3 more weeks. So now you're looking at a window of like 8 weeks from the date you did the service, but you still got to make payroll next week. You still got to pay the rent on time. So some of the owners, I'm sure, a therapist comes into work, they do their notes, it's amazing, and then some therapist doesn't. If you're a big size, if you're three therapists, not a problem. 5 therapists, not a problem. If you got 100 therapists and 10 of them are just doing it a little late, then you got to talk to 10 therapists like right now, and then you got to follow after them and make sure they get it done. You don't want to fire them over it, but so it's just management around the business methodology. I think that's really important, and we have to manage that: fixed reimbursement, volume, delayed payment, making the business running it tight, making sure that every single day you treat a patient or you run your clinic, that you have to be on top of it. Now, if I just put an ad out there on Amazon or something and people start coming in, check a couple of reviews and make sure that the sourcing of the product is normalized in time, make a few phone calls. I know I'm making it sound a lot easier than what it is, but I don't know. What if somebody pays you? What if you sell 50 million products on a Black Friday? I mean, you're good for a little while.
Yeah.
You don't have to have a daily stress.
All right, last question. You got the business at a pretty good level right now. Is there anything you would have done differently? Like really go back and be like, I would have done that differently.
It's a really good question. For what I've achieved in physical therapy at this point, in my opinion, is very rare.
And go ahead and say it. You are the largest private. Are you the largest in New York?
I mean, we're probably top 3 in New York, top 2, top 3 single. We're definitely the. Well, anyway, we're top 2 or 3 of still privately owned private practices, private practice in the state of New York.
Nice.
And we weren't obviously in the beginning 20 years ago. We're probably like one of the smaller ones. But in terms of your question, I would have. My honest feeling is I would have been more relentless about making sure things got put in and didn't really listen to excuses from people. From my staff, really looking at objective data, seeing what is the reason for a decline, and digging in without having any back off, because I think that's a big problem that a lot of business owners have, managers have, junior managers have. It's they're really scared, and I don't blame them. I mean, I was there with every single conversation. They're afraid to lose people, and I feel like that challenge limits the scope of the people that are around. They're learning, you're learning, and also like growing a business. And that's been so hard. I've seen that people have given equity to, so many people in their businesses, in terms of like opening a clinic. And I don't have a problem with that. I think if you have 10 clinics, 5 clinics, and you want to do a 6th or 7th with a partner, or you want to do a 10th, 11th with a partner, great, go for it. But you should have substantial equity in your business, that when you have that conversation with that potential partner, that they're like, dude, I really should get, like we're having a conversation with one of the guys right now as a quick example. He sold his practice to me last year. He's been in the field since 2002. Good guy. Ran his own private practice. Knows everything about it. Sold to me, stayed on board, paid him a salary. He's working for me. He's got a contract till probably the end of this year. And I told him yesterday, I said, look, if you want to open a practice with me, I'd recommend you do so. And here's the reason why. Forget about the management stuff that I could benefit you with. Forget about all the team that we have. Let's put that aside for 1 second. I'm going to get you better rates than what you had in your old business.
Mm-hmm.
Clear cut. Here's 1, here's 2, here's 3. These are better rates. So based on the value of my company, plus the better rates, instantaneously, if you do anything with me, you'll be more valuable than you were in your prior experience. Is it worth it for you? Now, I could say that to him today with 2 factors in place. 3 factors, actually. Number 1, I have better rates than he could have had on his own. If he goes out tomorrow and does it on his own, he will not have as good a rates as I have.
Mm-hmm.
Plain and simple. The second thing is he will have a team that was better than his old team because it's just larger and more substantial. That's pretty obvious based on my size, but I have the size that's substantial enough for him to recognize that. So he recognizes both of these things, black and white. There's no questions asked. There's nothing to say about it. 0, 0, 0. No problem. And the third thing is, if he's going to have that conversation with me, he should know that every percentage of equity that he has with my company, ultimately, for the amount of work he's going to do, either by himself or work for somebody else, that work will be much more valuable than what he had before and what he could have working with somebody else, considering the fact that he either chooses to work with me or somebody else. I mean, somebody else could offer him something like that potentially, but how much different is it going to be, Eric? Like, as another company say, hey, no, wait, we got good reimbursements too, a little better than ReadyCare, but we want to offer you the sun in the sky. You want to be, like, why would they do that for him and not 10 other guys or 50 other guys? So if you have a company that has 150 guys or 500 locations, why would you give that equity away? So I basically put that guy in a situation where it'd be completely ridiculously dumb for him not to make a move with me.
Yeah.
And that's when I'd give equity to certain people. To get to that point is hard as hell. And that's where I would say that if I can do things differently.
Yeah.
That's what I would
do. But you did hold on to your equity for the most part, which I think was a good thing. Mm-hmm. Mm-hmm. All right. That's good. That's enough for today. To be continued. Be well, everyone.